Hi guys, welcome back. We're back with another video, and in today's video we are going to talk about imbalance. Now for those people who do not know what imbalance is, put in simple terms, imbalance is basically the inefficiency between buyers and sellers. All right, so we're not going to go through all that explaining, right? We're going to keep it very simple and try and make it easier for you to actually apply this in your trading strategy. Okay, so for a market to be considered efficient, all right, basically keyword will be the wicks, right? So as you can see, we've got a nice decision point type 1, which is an engulfing pattern, and as you can see, this wick right here, price came back right to that area, so that's efficient. And as you can see, same thing on this candle. We had this wick, price moved back to that area, and then right here, same thing happened, right? So when we say there is imbalance within the market, we were talking about something like this, these gaps. As you can see on this example, right, we've got this wick, and this wick did not make it to this area. So this area right here, right, we can say there's an area of imbalance, right? As you can see, price does not come back and fill this gap right here. Right, so basically imbalance, what we know about imbalance, what you should know rather about imbalance is whenever there's imbalance, price will definitely come back and fill up that imbalance or that gap, right? But sometimes this does not happen immediately, right? Sometimes it can take days, weeks, months even, right? So you just need to know how to apply this in your charts the right way. Right, and by understanding, especially when we put other things into the picture like your liquidity, knowing imbalance is very important and will allow you to actually take high probability trades and understand where the market might push to. Right, so now we can look at some charts. And we'll just try find what I just told you right now. All right, remember, you will not find this on every chart. All right, and as I said, it will not be immediate at all times that those areas will be closed up, right, or that imbalance will be covered, right, because price will always come back, right? Price will always come back, but it's not immediate. Right, so also knowing your time frame is very important, right? Knowing your time frame is very important as you add this to your strategy. So here's a simple example. As we can see, we're at the market giving us a demand area here, and if we zoom in on that zone, what we can see is price gave us imbalance right there. Right, we had this wick, right? It's a very small wick, and then we had the next candle there. So as you can see, this was our imbalance right here. So as I said, whenever this happens, price will eventually come back to fill up that gap, right? So in this case, this was a nice example. This is on Bitcoin. As you can see, price broke structure. All right, price broke structure. This was the zone responsible, right, for that break of structure. And as you can see, price continued pushing up, right, also creating imbalance along the way, as you can see with this area here and this area. And as you can see, price definitely filled up that imbalance right there. So just by understanding the market structure, this becomes a high probability zones for us, right? This demand area down here becomes a high probability area or zone for us, right? Because we understand that the market needs to push down and cover this gap up. So as you can see, we had a nice correction to the downside, back to the zone, and this was a fresh zone as price was actually coming back to that area for the first time. All right, and we can also see as price was pushing up, right, we also had some liquidity being built. In this case, this imbalance right here was covered up. As you can see, that move covered the imbalance, and we can see some liquidity being built right there. So as you can see, price came down all the way down there, and we had a nice opportunity to enter the market going long, right? So remember what I said, we also had imbalance here. All right, we had imbalance here, and so this is where our gap was. So as you can see, price did take its time, but it eventually got back to that area, right? If you were watching that, actually came back to that same demand area and broke it, right? Finally broke that area. So understanding this will definitely increase your probability, as you will know where you can actually expect the market to push to, right? It can also give you confidence to enter a trade, right? As long as if it is in line with your market structure, right? So we can find these examples everywhere, guys. We can find these examples everywhere on any time frame, right? There's no specific time frame for this, right, where you can actually look for this, right? But this would definitely increase your probability. Let us look at GBP USD, and let us see if we can find those examples maybe in our higher time frame. Here's another example, right? And this is also good when you actually understand where the market is coming from. So as you can see, price is coming from this area. We've got that pattern that I just showed you, right? That's the wick, and then the other wicks came through around this area. So we did have a small imbalance right there, and as you can see, price finally pushed up and went back to that supply area, right? So it's not going to return immediately sometimes, as you can see right here. This was the imbalance we had, and then price finally came back and filled up that imbalance. So we can also find this in our shorter time frames, guys. Doesn't have to be the higher time frame at all times. We can also look for this in our shorter time frames, and it will definitely help you to make better trading decisions. We also had an imbalance here, as you can see right there, and as you can see, that candle filled that gap right there, right? And as you can also see, the candle that was used to get to that area also had some imbalance right there, right? And then price came back to fill up that imbalance and gave us a mini reaction to that demand area there, right? But I hope you understand what I'm trying to show you and how this can actually help you to make better trading decisions. So right here, price didn't really make it down here. Price didn't really make it down to cover, but you can see that it was covered. Most of it was covered, as you can see, right? So you need to be very selective when you're adding this to your strategy, whatever strategy that you trade, and if it's profitable, you can back test and see how you can actually use this to your advantage. All right, so here's another example. Price went up, giving us that imbalance, and as you can see, price immediately came back, filled it up, moved around, not really a clean move in any direction, right? So as you analyze your charts, right, and by understanding imbalance, it can definitely help you make better trading decisions, right, guys? And if you're new here, don't forget to hit that subscribe button for more videos, so you do not miss out when we drop any new video. All right. So we're gonna look for other examples on pairs like AUD, CHF, and see if we can identify what we just looked through right now on the market. Okay, so here's another interesting one. We had a supply level right here, and we can see price did not really come back and fill up all this area, this gap, right? And we can see the manipulations that we had right there, right? We definitely had a bunch of money above that area. As you can see, relatively equal highs, right? And then we had a trap above that, right? After, filling up this imbalance here, right? So you can definitely use this, right, to understand your zones, and also, as I said, know where price might move back to. But you need to understand that imbalance price will always come back to cover it up, but we just don't know, right, when it's gonna happen. It might be this week, it might be tomorrow, it might be next year even, right, depending on the type of trader that you are, right? But by understanding liquidity, this would definitely help you, make better trading decisions, right? I mean, something like this, right? We had imbalance right there, and then look at what happened, right? This was a demand area, and then price filled up that imbalance and actually tapped the zone, and the market continued pushing up. Excuse me. Right, so just by understanding this, you can definitely increase your probability, right, of understanding the type of trades that you really need to look for, right? Because if you can actually identify your supply zones, right, and only stick to trades or zones rather that show you imbalance, right, then you can definitely increase your probability. As you can see, we had an imbalance there, and it was definitely filled up, and then price came back to the hidden base area, and then price continued shooting up. All right, so take some time and backtest, right? Don't just watch this video and and just forget about it. You need to actually sit down and backtest this, right? That's the only way that you can master anything you learn within the forex market, by actually sitting down and backtesting this stuff, right? So there we go. We've got a demand area, we had an imbalance there, and as you can see, after price pushed up, broke multiple structures, right, price then finally gave us a correction back to the demand area, and look at how price then moved away from that. All right, guys, hope you learned something from this video. Don't forget to hit that subscribe button and turn on the notification bell icon to be the first to watch when we upload any new content. Also, check out our free Telegram channel. Find the link in the description below.